Hi, my name is Alex Carlucci with Gus & Cho Associates. I want to talk to you about underwriting process during this COVID and in general. So during this COVID, it's a lot longer. For refinances, it's a lot longer. But the underwriting process is after I package a loan, I'll give it to my processor. She goes through it, makes sure there's no errors. She submits it to an underwriter. That underwriter opens it up and reads it like a book. Hopefully we put the book together clear enough so the underwriter sees everything that we need is in there. Like she wants to make sure that the bank statements are in there, the W-2s are in there, the pay stubs are in there. If everything's in there right, she can read that book clearly. If things are missing, she gets mad and closes it up and suspends it. So the underwriter's going to go through this, and they're going to verify and look at all the income you make, and then they're going to ask for us to verify it with the employer. They're going to look at the bank statements. They're going to make us to verify any large deposits. They don't like cash. Once they feel like they get the income and they have the assets right, then the credit report, they're going to review that. If your credit looks good, there's no errors on it, like the disputes or anything bad, that a collection that's for a student loan or anything odd on there. So the underwriter's going through all this stuff, and they're the person that's going to make the decision on your loan. So during COVID, what they're doing is they're being extra special. So when we send a verification of employment, we're looking for any drop in hours now. So if you work in 40 hours a week and now you're working 32, you're not eligible for a loan. So there's a new COVID thing. If you're self-employed, they're looking at your business returns for the last 2 years normally, average the last 2 years. You write your own little P&L for the last 6 months of the year, or whatever the year-to-date is, and that was what they used to use. Now they're looking for your bank statements to see if you're actually depositing the same amount of money you always do. So COVID has interfered with the underwriting process in that way. So they're making sure that you're still working if you're self-employed, and if you're W-2 or hourly, they're looking to see if you're working the same amount of hours. So keep that in mind. If you're salary, you're good to go. So they're zooming in on those types of things. Now, when it comes to closing, the underwriter's also making sure you're on the closing day that you're employed. So making us do verification of employment same day to make sure nothing's happened to your job. So that's what's changed in underwriting. But anyway, after they find everything and they're happy with everything, they give you the issue and approval, they send out conditions, and then we have to satisfy those conditions. Sometimes it's just insurance, sometimes they want an update on appraisal, sometimes the title's got some spelling on it, sometimes they want some letter of explanations from the borrowers. Once we get that all in, then we wrap it up and we hopefully get a CTC. Once we get a CTC, it goes into the closing, and then you go to the title company and you close. So that's kind of the basics of how it's going on and how the COVID's kind of interfering with all that. Now when you go to the title company to close, it's kind of a drive-through. I've seen title people sitting in one car and then the buyer sitting in the other car and the seller sitting in the other car, and there's a little runner going back and forth between everybody going inside, faxing things, coming back out. So it's kind of silly, but that's how the COVID's affecting the closings themselves. So if you got any questions, I can explain all these little nuances we have with COVID, and we'll talk anytime you want. 630-915-7550.